What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. Today we're going to be going over AMC exit strategies. So a lot of you are going to be playing AMC next week during its volatility, and not many people will be knowing how to exit their positions, specifically when to take profit or when to cut losses. So this video will be going just that. So before we get started, take a look in our description for our Patreon link. It's a private Discord server, only costs $20 a month, and you get access to dozens of resources in the server. One of it is our options alerts. We have day trades, swing trades, small account trades, so people with small portfolios have a chance to make money too. We also have spreads, and we have stocks for those who don't want to do options, as well as crypto alerts. And as we can see in our profits channel, a lot of people are making money. This guy made 223% off our Riot calls. This guy made 200% off of our IVR calls, and a lot of people are making money. This profits channel is public. We don't delete anything, and a lot of people are enjoying our services that we have invested thousands of dollars into. So let's get back into the video. AMC. If you're going to be buying AMC, you're going to want to know how to exit positions, and it determines on what type of positions you're going to be buying. So for me, I plan on buying the 145 strike calls expiring this week as a lottery ticket. I might buy a few if they're cheap enough, but we don't know what the price is going to be opening at next week. So assuming I'm holding these $145 calls, my plan is to cash out whenever I see a pretty big amount of profit. I don't plan on cutting losses. The amount of money I'm going to be putting into, I'm willing to lose it all. So if I buy 5 contracts for, say, $500, I'm planning on risking it all. But keep in mind, I have a slightly larger account than most people, so $500 is not going to take a big hit on my portfolio, as this is going to be kind of a gamble lottery ticket. So if the contract shoots to like a 400%, 500% gain, of course I'm going to be taking profits on that. Who wouldn't? But if you want to be it's based on your own risk tolerance. If you see profit that you're happy with, if it's worthy of taking a screenshot, then you should probably take profits on it. Be happy with the gains, and don't miss out if AMC happens to continue skyrocketing after you sell. We can't really time the top. We can't time when it's going to dip. So the best thing we can do is be happy with the profits that we end up making, and then use that new money to invest it in other safer stocks, because AMC is very volatile. It's going to be a gamble. So if you're buying something maybe like a $50 strike with a little bit more time, say July 16th, so a month out from now, you're going to want to have a different strategy, because a $50 call is going to be costing you a little bit more. It's going to cost you almost $1,600, which is a good amount of money. A lot of people don't want to lose that much money, so you're going to want to set stop losses. So determine this as the day goes on, how much you're willing to lose. If you're only willing to lose, say, $400, then you want to set your stop loss at 25%. So you only lose around $400. It's very important to set stop losses, and sometimes AMC or stocks will drop. Your stop losses will get triggered, and then it ends up shooting to the moon the next day. That happens, but on the bright side, if AMC goes down, the stop loss gets triggered, and it continues tanking, you're going to lose a lot more money. So this is the safest way to play AMC. You're going to want to set stop losses and also determine take profit levels, whatever you're comfortable with. So if you have a little bit more time, you can have a bigger take profit level. And of course, if you're having something like slightly more in the money or at the money at like a $50 strike, it's going to take a bigger move for the AMC stock in order to make profit. So if AMC goes to like $200, you're not going to be making as much on this $50 contract rather than the 145 strike calls that we bought for the June 18th expiration date. So think of it as whatever you're comfortable with. If you're happy with the profits, don't be afraid to cash out. And if you're buying multiple contracts, don't be afraid to sell partially of your position. Like if you want to sell half of your contracts, you can do that, and that's a great way for a lot of day traders to capitalize on taking profits when they can. So you can slowly take profits throughout the day in AMC, and if you miss out on profits, don't get discouraged. You still made money, and that's how most people should play AMC. You want to be very careful. You want to take profits in and out quickly, and you don't want to get too greedy. A lot of people are going to lose money on AMC because they want to keep holding until AMC goes to $1,000. AMC might not hit $1,000, so don't get too greedy. A lot of people are going to lose that money that way, and I don't want my viewers, my subscribers, to lose a ton of money. Anything placed into AMC is going to be a gamble. Keep that in mind. So set appropriate stop losses, whether it be through the Robinhood app or mentally maintaining that stop loss level in your hand if you're able to monitor it throughout the day. So my other strategy besides those call options are going to be the cash secured put method, which is my favorite option strategy. I'll probably sell a few of these, maybe one or two. And basically a cash secured put is going to be one of the safest option strategies that you should be playing on AMC. It capitalizes on the higher increased premiums due to the high implied volatility. So we can do something like a $40 strike for expiring June 25. So assuming that AMC stays above $40, we're going to be making $523 of credit for this $40 cash secured put. And I will be making a more detailed video on cash secured puts later, but it is my favorite option strategy, but it does require more capital than the normal investor. So you will need $4,000 of collateral in order to sell this put right here. As we can see here, minimum credit is going to be $523, and if we sell one, we have to put down a collateral of $4,000. So most people can't really afford this. If you can't, then don't worry. Just in the future, keep that in mind. And on other stocks that are volatile with lower stock prices, those would be puts that you want to sell on. AMC is kind of at a weird range, and most people can't really afford to sell cash secured puts on this stock. So that's about it for this video. Make sure you set your exit strategies. Go in with a game plan. AMC is going to be incredibly volatile, so you want to make sure you're not caught with your pants down. So comment down below what your strategies are going to be. And of course, please subscribe if you're new here to the channel. It helps out a lot. Thanks for watching.